Sanbonani Dumelang, good evening and welcome to episode 242 of the Private Property Podcast. I'm your host, Uzamantungwa Kumalo. Actually, I see it's episode 243 of the Private Property Podcast. Well, welcome to the show. If you're joining us for the first time, you've missed out on 242 episodes. So do make sure that you go to our Facebook or our YouTube page to catch up on some of the great content that we have already brought to your screens. And to all our regular viewers, welcome to it. You know how we do it every single weekday at 7 p.m. You and I have an appointment where we talk all things property. And of course, we love connecting with you across our social media pages. So do make sure that you're following us on Facebook, on Twitter, on Instagram, as well as our channel on YouTube. You can follow myself at Zamantungwa_K on Twitter, as well as on Instagram. And of course, one of the great things that we love here on the show is that we give you the best tools that you can use that will help you navigate all your property decisions. And it doesn't matter whether you're a landlord, you're a tenant, you're looking to buy, to sell, to build. It doesn't really matter where on your property journey you are. This is a show that helps you get the right knowledge for your property journey. And of course, I never come alone. I always bring an expert to help us navigate all our property concerns, and we'll get into that in just a moment. But as I love talking about the other shows that you can watch across our social media platforms, it is a Tuesday today. And of course, later on in the show, you can catch award-winning farmer Umbali Noko on the Farming Podcast. And that show comes to your screens every Tuesdays and Thursdays right here on Private Property. So if you've got, some green hands or green fingers and want to go into agriculture, or even just want to get to know a little bit more about how our food production is done, then that is a show that you want to watch every Tuesdays and Thursdays. And every Monday and Friday, Chad brings you the Home Shoppers Show. So if you're in the market for a new property, or you just want to daydream about what is out there in the market, then that is a show that you do not want to miss. He takes you through some exquisite homes that you can get your hands on. And of course, all those homes are available on our website, www.privateproperty.co.za. And every Wednesday, AC Clarkson speaks to a lot of inspiring individuals who've gone through the first-time home buying journey and have grown their property portfolios quite significantly. So do catch on the First-Time Home Buyers Show as she's in conversation with them, and you can learn a thing or two about how they've gone from that first property to, of course, expanding their property portfolio. Well, those are some of the great shows that you can watch across our social media platforms. Do keep engaging with us, sharing the live, and of course, interacting with us on social media. We absolutely love hearing from you. And one of the things that I'm quite excited about this evening's show, this evening we're looking at 105% home loans, everything that you need to know about them. And I'm joined by Linda Rall, who's a Provincial Sales Manager at ooba Home Loans. Good evening, Linda, and thank you so much for joining us.
Good evening, Zama, and thanks for having me. It's really a great pleasure to be here with you and all your viewers.
It's such a pleasure to have you on the show, Linda. I was talking to you off air about just how important this conversation is, because more often than not, people, we tend to not know what LTV is and what 105%, tends to be, and what you need to do to get it, what that extra 5% can go towards. And that's exactly some of the things I want us to explore this evening. But a good starting point, Linda, would be, what is that 105% home loan? Because I think oftentimes people hear about, 80% or 90%, or of course, 100% LTV. But the moment we now go over that 100%, what exactly do we mean by 105% home loan?
Yes, absolutely. I think, as we said, we talk about LTV, which is loan to value, and 100%, 80%. What does it actually mean? So to just explain it briefly, when you purchase a property, there's a purchase price that you negotiate to pay for the property. If you're wanting to gain a finance for the entire purchase price, then that would be referred to as a 100% loan, because you're now borrowing 100% of what you're wanting to purchase. If you're looking at 105%, the 5% is added on and available from some of the lenders, not all, for first-time home buyers or young professionals to assist them to cover the costs. So the 5% additional amount is there to cover your transfer and registration fees, which sometimes people find difficult to also, bring that sum together to make the deal work. So in a nutshell, 105% is a full loan of 100% of the purchase price, plus a bit of extra to help you cover the costs so that you can make the property transfer a reality.
And I think, Linda, probably the next question that's on everybody's mind is, what does one need to do in order to get that 105%? You mentioned how it's not available from all financial institutions, only some of them, and it would often be for, their young professionals or first-time home buyers. What does an applicant who falls within this category need to do in order to be able to access that extra 5% for the home loan?
Okay, so there's a good couple of competitive products out there in this space. A lot of the lenders are looking to gain market share with regards to new entrants into the market, and so they have different offerings on the table. So, for instance, one of the lenders will look at first-time home buyers, regardless of your age, as long as you've never owned a property before. And if you qualify, and I say qualify, and I'll explain a little bit about that later, you can get as much as up to 1.8 million rand finance, but that will include the extra 5%. So your full loan plus the 5% can't exceed 1.8 million. And I think that's quite a reasonable amount of money for a first-time home buyer to get into the market. We've got other product lenders that would look at young professionals under the age of 35 with a professional degree. And what I mean by that is typically a 4-year guarantee or an NQF8 level qualification. And they would be able then to qualify for 105% bond as well, to the maximum of 1.5 million, sometimes more, depending on the earnings. So what I would also want to mention is in what we call the affordable space. So that is a criteria that's linked to the client's income bracket. There is also 105% opportunity there, but that would depend on the client's income. So the applicant or co-applicant, so if it's a husband and a wife, each of them cannot exceed a monthly gross earnings of, say, 25,000 Rand. So it's a maximum of 50,000 Rand income for a dual application in this category. That will also give them the opportunity to access the additional 5% towards their costs. If I can just say that on 50,000 combined, if you do a very rough calculation, it will probably give you a loan opportunity of about 1.9 million. But that would obviously then include the cost as well. And for that type of purchase price, it's really a good bracket to be able to negotiate in. But I did mention that clients will need to qualify. So what does that mean, Zama? It means that there is obviously an affordability calculation that needs to happen, and the banks need to satisfy themselves that the client is able to afford the finance. And I'll explain how that works. And on the other side, there's also the credit worthiness of the client. So what does their credit score look like? How have they been behaving in terms of conducting their credit accounts? And those two items is then assessed in order to say, okay, you can afford this loan. You have a good credit risk profile. We can afford you the 100% finance plus the cost portion. If, on the other hand, you can't afford the repayment, say, for instance, you have got excessive debt, and your net surplus, the amount of money that you take home after you've paid your deductions, after you've paid your living costs, and after you've covered all your legal or credit agreements, that is termed to be the net surplus income. If that amount is not same or more than the amount of the bond repayment, you will not be able to be afforded the finance, because according to the National Credit Act, you have to have sufficient net surplus income to be able to qualify for that repayment. In the old days, we did a quick back of the matchbox calculation on 30% of your gross monthly, and off you go. There you go shop. It's not that easy anymore. We have to look at your actual expenses. Mm-hmm. From a credit profile point of view, and I think this is where it's very important for viewers to take note. You can't be conducting your accounts in a dismal manner and then expect to be able to qualify for a loan that's firstly going to be possibly your biggest debt that you may enter into. And secondly, it's a loan that stretches over a 20 to 25 to sometimes 30-year term. So you need to know that when you are being assessed from a credit score point of view, you have to have some credit, because the banks would like to see how you behave. They don't want to take a chance on someone who's never had an account in their life and they can't see how that person has been repaying that account. But by the same token, make sure that you pay the minimum amount due every month and absolutely on time. Don't skip a single month. This is a very key aspect of making sure that you have a good credit record.
Mm-hmm. We are this evening in conversation with Linda Rall, who's a Provincial Sales Manager at ooba Home Loans. And we're talking about 105% home loan and looking at everything that you need to know about it. We're taking your questions and comments this evening. And we've got a comment here from Facebook coming from Rall saying, what is the main reason? Actually, that's a question. Let me start with a comment from Utsepo Mokhobudi. We'll come to Rall's question just now. And Tsepo says, I prefer to rather save for the bond costs because it teaches you to be disciplined and to get used to paying that bond repayment every month. And now to your questions. The question coming through from Rall after asking, what is the main reason why banks do not provide 100% bond approval on vacant land?
It's risk related. So first of all, to the comment that you've made, that is a very sound concept to save up the costs so that you have the discipline of putting that money aside. And it also would give you potentially a better interest rate, because the lower the risk to the bank, the more, the more lenient they are towards giving you a better concession on your rate. However, in terms of vacant land, now this is where the banks require a rather large deposit, in most instances up to 40%.
40%, yeah.
That is because a piece of vacant land does demonstrate some risk towards the lender, in that if you cannot afford to pay for that piece of land, it's easier to walk away from a vacant stand than from a home. And it could also, banks don't want to be the owners of land. They want to own buildings. They want to be the owners of buildings because, if you have a piece of land and you never ever build on it, that is not ideal. So there is an incentive or kind of encouragement to then put a dwelling on so that you can increase your loan potential to a higher level. So for instance, when you do a vacant piece of land and you are applying for the building loan at the same time, you can very well apply for 100% loan, depending on your affordability and your credit score. And that then becomes a much better sort of package for you as a client, that you don't have to come up with a big deposit upfront.
And Linda, I know because we regularly speak to the Absa Home Loans team, we've asked them this very same question around not granting 100% LTV towards land. And one of the things that they added to your answer was that it's actually easier, it's harder rather to dispose of land than it is of a property that already has bricks and mortar, whether it's a house or an apartment. And more often than not, banks are not in the business of owning those kinds of assets. They've granted you that facility with the expectation that you'll be able to meet it every month. In the unfortunate event where you are unable to do so, they have to repossess the asset. They find that it's harder for them to sell land than it typically is to sell a house or an apartment. And so that's why they require you to have quite a lot of skin in the game when you want to buy a piece of land. And
you're absolutely right.
And more of your questions and comments at home, we've got a great one from Luska Lu on Facebook, who asks, what is the maximum interest rate on a home loan?
Maximum interest rate. Well, look, we often look at the maximum concession that we can get for you, which is below the prime. But it all depends on your individual application, what the banks would be prepared to afford you. There isn't, how can I say, an absolute maximum, but the banks need to be competitive. So they will stay in line with what is generally acceptable. At the moment, our average rate is 0.03 below prime. So even though it's fractional and sounds like nothing, it makes a big difference on a big amount over a long period of time. So I would say that, when you enter into microlending, you probably would face, horrendous rates like 20 up to 25, maybe even sometimes 30%. But on a home loan, you shouldn't be paying more than prime plus 4, and that is if you are really particularly presenting some form of risk. So generally, we manage to overall secure rates that are either very close to prime or below prime. And the banks are competing to bank that business, so they are more willing to price in order to grow their market share.
Linda, when you started answering that question, you pointed out how you would ordinarily deal with the maximum concession. I'm interested to know what the maximum concession would typically be, just so viewers at home at least know what they should try to aim for and work towards. I know that it's not always possible to get it, but it's certainly great to know what you can attempt to aim for with the various financial institutions.
Zama, it's a very, very dangerous question for me to commit to because it's so fluctuating in terms of individual scenarios. But I can tell you, we have seen the odd 2% below, which doesn't happen a lot. So please, if your viewers want to put that as a fixed expectation, they may end up disappointed. But we definitely are able to negotiate below prime in most instances. When it comes to 100% plus cost, it becomes a bit more difficult to get that pricing at a lucrative level because the bank is now 100% exposed plus more, and they have to price for that risk. So we're going in with a deposit, and like the other viewer said, if you save your costs and you at least have that, then you have a better opportunity to get a better negotiated rate for you on your loan application.
More of your questions and comments at home, and I'm seeing a lot of new names asking us questions. Absolutely love that. On Facebook, we've got Uvuyisa Mavungwana, who asks, do you take clients with government subsidies?
Of course. Absolutely. We will assist you with the government subsidy, and we will apply it as part of the home loan application process.
And quite related to that is a question from Uterin Jabulo, also on Facebook, asking, does ooba Home Loans assist with the FLISP application?
Okay, so FLISP is really absolutely available through ooba. However, the application is dealt with at the Human Settlements Department. So we can assist with connecting and making sure that we help you with the paperwork that is required to apply for the FLISP, but we don't physically make the application for FLISP, but we can guide you along the way.
Okay. And we've got another really great question here coming through from Facebook asking, what's the trick to ensuring that you get accepted for a home loan? And Linda, I had said to you off air that I wanted to ask you later on, what are some of the things people do that have their applications rejected? So what can people then do to make sure that they get accepted or they have a successful application when they're applying for a home loan?
Okay, so a large number of people are rejected because of a low credit score. Their credit retail bureau score is perhaps below the required 600 point level, which is what is supposed to be the minimum that the banks would look at. When I talk about that, what I'm saying is that how you conduct your credit accounts will accumulate in a point format. So your credit bureau will appoint a total score to your behavior in terms of missed payments or payments written off because you just never managed to pay them, or big debts that sit under perhaps bank products. All those types of things are being scored on a point system. So if your point system comes out above 600, your chances of bond finance is totally improved. However, if it is below 600, you may need to do a little bit of work on rectifying the situation to get to a point where you can apply. But again, if you're using a bond originator or a home loan comparison service such as ourselves, you will get the guidance. And it's important in that instance to, rather as a new person to the market or someone who wants to know what your potential for bond finance is to get yourself pre-qualified. We've got quite a few tools in that arena that we can assist you with that will give you a very good look at what your profile looks like, what your score looks like, and where you should be focusing to bring that point count up to where you can now start applying for home finance. So that's the one trick. The other trick is to not overspend. I mean, I think most of us as, young people getting a nice big salary paycheck sometimes rush out to go buy that nice beautiful car. Often that can be the cause of your affordability not being sufficient to cover your home loan repayment. So just, spend your money wisely, create your credit profile in a mature and responsible way. Don't overspend, because if you don't have, as I've alluded to before, sufficient net surplus income to cover that bond repayment, you are not going to be able to get that finance approved.
Taking more of your questions and comments at home, we've got a question from Facebook coming from Ooba Matthews, and he'd like to know, as presented, does it mean first-time buyers who are over 35 years do not qualify for the 105% home loan?
Not at all. First-time home buyers over 35 will be able to qualify, but not at that particular lender where they have a specific product for first-time home buyers that are young professionals. So there's different products at different banks. And again, that's another reason why it is so specifically beneficial for home buying clients to use the services of a home loans comparison company like ourselves, because we understand all those nuances and where the different criteria is applicable. And we navigate amongst all the various different products available to match you up with what suits your need. And to answer the gentleman's question, definitely you will be able to qualify at one of the other lenders.
Now, Linda, one of the things that you had mentioned is how, some of the things that people do that potentially gets their applications rejected, and having to do with, sometimes whether it's a thin credit profile or very bad credit record. How long does it typically then take to essentially build your profile or to repair your credit record in order for you to up your credit score? Let's say somebody was in the 500 range, or perhaps even 550, and they're looking to be above 600, 650. Typically, what's the sort of period would it take for somebody to work towards that above 600 mark for them to go back to an application and apply again?
Zama, in an instance where someone has perhaps just had one or two missed payments, it might be as short as a 3-month period for them to stick to their repayment period and improve their score. But most of the time, it takes a little bit longer. And it also, I suppose, depends on the severity of what has caused the drop in your credit rating for the time period that it will take to rectify. If it is a rather large or serious oversight that you have carried for a couple of months, you might have to wait 6 to 12 months to have that behavior rectified in your history in terms of a credit bureau outcome.
We've got another question coming through from Miriam Calvert on Facebook asking, if my last missed payment was a year ago, will I qualify for a bond?
You should be able to. You should obviously by now have brought that account back up to its up-to-date stage. And perhaps you have an explanation around why you had that 1 month missed payment. So if there is any issue on the credit score, a good bond consultant will also provide some explanation and motivation with your application. So to answer that question, I think you should get yourself pre-qualified to get a much better and more accurate assessment of where you stand right now.
We've got an interesting question here around insurance coming from Ulondega Ngubane on Facebook asking, which insurance must you take, or is that not necessary when getting a home loan? And I like this question because that's one of the costs that we tend to not be aware of when we are, applying for a home loan and we have ambitions of home ownership. So when it comes to which insurance we should take, Linda, which insurance is a must-have when you are applying for a home loan or are going to get a home loan?
So there are two insurance products that's applicable. The one is a compulsory product, but you obviously have the option as to which service provider you want to take that policy with. And it's normally your building insurance. And that would only be applicable if you're buying a freestanding dwelling and you need to insure the structure so that if anything happens to the building, that the risk is then mitigated through that insurance policy. That would remain a compulsory expense that you have to factor in. Often, the life cover can also be made compulsory to the loan in certain income brackets and in certain age groups and in certain assessment outcomes. The banks will come forward as a condition of the grant to say that life cover is compulsory. And that means that the bondholder needs to take out a mortgage protection so that in the event of death and then also disability or retrenchment, the bond will be covered and sometimes repaid in full, depending. So those are the two products that you've got to, just factor in. And it's also wise for you to get quotes on those two particular insurances and compare them and make an informed decision. But don't think that the life cover, because it's not compulsory, is not a good option to consider. Because at the end of the day, if something happens to the bondholder, what's going to happen to the dependents that need to still live in the home? So I've seen so many instances, especially over the last year with the pandemic that's affected a lot of lives, how people have been utterly grateful for the fact that their partners or the people that purchased the home or that was responsible for the repayment of the bond had the foresight to take that cover and protect the asset for their family.
And, Linda, as we begin to wrap up, I want to then get a sense from you when, in the event where somebody's application gets rejected and they obviously still want to pursue home ownership in the near future, what are some of the active steps should they take in order to best position themselves for the next time they do that application and hopefully will have a successful application?
Zama, they must not give up just because they can't afford or be successful now. They must realize that somewhere in the future they will be if they follow a couple of simple rules. Look after your credit accounts, have credit, handle it well, don't have excessive accounts. Try and get rid of additional accounts that is not necessary, that is creating an increase in your monthly expenses that you can bring down in order to improve your affordability. Also, in terms of income, sometimes income is difficult to prove if it's not reflected in a bank account for a consecutive period of time. So if you are not having your salary paid into your bank account, If you are maybe a sole proprietor or self-employed, you're paying yourself, or you're working for a family concern and you're getting paid intermittently, try and start creating an income record with the same amount of money or set amount of earnings that you are working for, to be reflecting in your account on a monthly basis over a period of time. If you are someone who has a portfolio of properties, then also make sure that you've got valid lease agreements in hand, and that those rental payments are being paid into an account where it can be put on a rental schedule and be produced to a bank as part of your earnings. So those are all the types of things that one need to consider when you want to purchase a property. If you are self-employed, you've got a bit more to consider. Self-employed applications are a little bit more tricky. I think you've covered that topic quite extensively in previous podcasts. But just to reiterate here, if you are a new up-and-coming entrepreneur, 2 years of trading is a must, so that there is a record of your business and you've got financials, and keep your books in order, have your accountant manage your affairs, and speak to your bond consultant before you start looking around, so we can prep you on your document requirements.
We've got a great question from Unomkosi Zulu on YouTube saying, I've not been working consistently for the past 6 months and just got a permanent job in March. Will I still qualify for a home loan?
Yes, if you have a permanent position and you've got an employment contract, and obviously you would have by now have received your first salary earnings, we can definitely present your application for a home finance decision.
Well, Linda, we're going to leave it there this evening. Thank you so much for joining us on the show.
You're welcome. Thank you for having me.
And that is Linda Rall, who's a Provincial Sales Manager at ooba Home Loans. Thank you so much to our viewers at home and to all the new people who asked great questions. It was really great to read out some new names this evening on the show. It certainly has been a pleasure to have you join us this evening. We are, of course, back tomorrow evening. We are back tomorrow evening at 7 p.m. and hoping until then you're going to be staying home and staying safe. But it's a Tuesday, and because it's a Tuesday at 8 p.m., you can catch Umbali Noko with the Farming Podcast.
Hi, I'm Alan Footman. I'm a sports tour operator from Cape Town. My family and I have been living in the southern suburbs for 21 years. What we love about the neighborhood is it's very family orientated. Lots of things for the kids to do, especially here where we are next to the farm, where folk can walk the dog, go for runs and enjoy the fresh air. In the southern suburbs, we're lucky enough to have some of the top schools in the country, and on top of that we have the University of Cape Town, one of the most famous universities in the world. Newlands is a great suburb, all the sporting amenities, Newlands rugby ground, cricket ground, etc. Down the road at Claremont, lots of shopping centres for the kids and for the mothers to do their shopping. Fantastic pubs and restaurants around like Forries, Springbok Bar. Bishop's Court is full of beautiful upmarket homes. Kirstenbosch Gardens, National Botanical Gardens right next door. What attracted us to Constantia is It's the large open spaces. I've always wanted to be a farmer, and now I'm living next to Provincial Wine Estate, the oldest wine farm in the country, where you have fantastic wines, great restaurants, got the best of both worlds. My family and I have loved every moment of living in Constantia. We couldn't be happier, and this is our neighborhood.